Our economic system is designed to profit when you make stupid financial decisions, which is why they don't want you to learn what I'm about to show you. Banks profit when you're in debt, and it's their dream for you to be drowning in debt for the rest of your life because that means you work hard to pay them interest and make them rich. Corporations profit when you spend all of your money. They love it when you go and spend all of your money at the mall, especially when you don't have the money to spend because that means they make a sale when they normally wouldn't. Your boss profits when you feel financially stuck because then you don't have the ability to quit or to go on a nice vacation because you need the next paycheck, and your government profits when you are just an employee because now you pay the highest tax rates and get the lowest tax breaks. What do I mean? As a licensed attorney who is not your attorney, what I can tell you is that investors get to qualify for lower tax rates or bigger tax breaks. When you are a W-2 employee, you don't. You profit when you build your financial education and you become an investor because now you can use all of these entities to your advantage. That way you can be the one that gets rich. But here's the problem. We're never taught how to build our financial education. We're never taught how to become an investor and use this economic system to our advantage. And that's why in this video, I'm going to show you how you can flip the script. That way you can use this system to your advantage. That way you can be the one that profits. And it starts by you understanding the 3 wealth killers. Wealth killer number 1 is the hidden tax. Do you ever feel like whenever you get a raise, it just isn't enough? You make more money, but you don't really see a difference in your bank account? Well, that's kind of by design. Take a look. Our money today cannot buy what it could 10 years ago, and our money is very different than what it was 100 years ago. Take a look. If we look between the years 2019 to 2024, we saw the median household income in America grow by around 20%, while at the same time, reported inflation came in at around 23%, which means if we trust these inflation numbers, the prices of things on average went up by 23%, while you only got a 20% raise if you are a median earner in America, which means you got a raise, but you're poorer now after the raise than you were before. You can start to see the problem. While over the same time, the stock market, more specifically the S&P 500, grew by 80%, which means if you are an investor, you got a windfall. Not only did you see your wealth grow faster than your salary, but your wealth also grew faster than the price growth of things. Now you might say, well, Jaspreet, this is just because of the pandemic. Well, let's look back in history a little bit further. Let's take a look at the last 5 decades right before the big inflation post-pandemic. Between 1971 to 2021, we saw household income in America grow by around 700%, which sounds nice, but we have to compare this growth in income to the price growth of things, because we know that just because you got a raise doesn't mean much if the prices of things are rising faster than your incomes. Well, over those same 5 decades, the average new car sold grew by around 840%. The median house in America sold grew by around 1,200%. The average cost of going to a public 4-year university, 1 year of it, grew by around 2,000%, while investors who invested their money in the stock market saw their wealth grow by around 4,000%. And again, this is taking a look at the S&P 500. What does this mean? Well, if you're a median earner, you just kept following the advice that everybody told you, work hard, save some money. Yeah, you got a raise. But you might notice that after this raise, you can't buy as much stuff as you used to before. This is what I call the hidden tax. It's inflation. Inflation disproportionately hurts the people that don't understand how it works, because what inflation does, the byproduct of inflation, is it makes things more expensive. Now you might know that, but here's the part that a lot of people don't know. While inflation also helps increase your wages, what we have seen through time is that wages have not kept up with the price growth of things. This has not happened just post-pandemic. This has been happening decade after decade after decade. And the real kicker here is that between 1971 to 2021, household income has grown 7-fold. But household income is also now based off of 2 income households. Back in the early 1970s, it was based off of 1-income households, because the way it worked back in the early 1970s was the man went to work and the woman didn't. So this income growth that we're seeing, the 700%, is not only based off of the raise that you got, it's also based off of twice as many income earners in one household. And even though you have twice as many income earners in one household, the income growth that we have seen hasn't kept up with the price growth of things, and it hasn't kept up with the wealth growth of investors. This is that hidden tax. It benefits investors while the average person doesn't even know what's happening. This is why it's so important for people to understand this, because the wealthy understand this and they're taking advantage of this system, and they've been doing that, but everybody else gets left behind. Now, for those of you that are weirdos like me and you want to understand why this is happening, I'll explain that very briefly, and then I'll go over wealth killer number 2. There are 2 years that really changed our money forever, and those 2 years are 1913 and 1971. In 1913, what happened? That was when the Federal Reserve Bank was created. The Federal Reserve Bank is a central bank here in the United States, and although they're technically not a part of the government, they have the ability to control and influence our monetary supply, meaning they have the ability to print money. But there was a limit to how much money the Federal Reserve Bank could print, because back in the early 1900s, our dollars, what we call money, was backed by physical gold. So if the Federal Reserve Bank wanted to print more money, we needed more collateral, which was physical gold, in order to justify printing more money. So that kind of kept the money printing in check because our money was backed by gold. But then that changed in 1971, when then President Richard Nixon took the United States dollar off of the gold standard because the United States government had a lot of bills to pay and didn't have the money to pay it. So instead of declaring default, which would have created that financial crisis that a lot of people were concerned about, President Richard Nixon took the dollar off of the gold standard.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets,
which meant the Federal Reserve Bank, which was created in 1913, could now print essentially an unlimited amount of money. So now, 1971, the United States government gets a blank check, they pay off all their bills, and, well, everything was solved because now the government didn't default. But then it created a new problem. And the problem was inflation. Because when you keep creating more dollars without having more wealth, more gold, well, the value of each individual dollar goes down, causing the prices of things to go up. This is why your financial education is so important, so you can become an investor and take advantage of this. And again, for those of you that are investors or want to be investors, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy and housing and stocks and crypto and the global markets into a fun and witty and easy to read newsletter. It's completely free. We have hundreds of thousands of investors that are reading Market Briefs every morning, and it's a lot of fun. So if you have not joined Market Briefs yet, I have the link for you to join down in the description below. Wealth killer number 2 is what I call financial blindness. We're all taught to climb the corporate ladder. We're all taught to study hard, get good grades, get a good degree, and then work really hard at your job. And what that teaches us to do is to be a good employee. But if you look at the wealthiest people in the world, they're not striving to be the best employee, they're striving to own the most assets. Because there's a limit to what you can earn as an employee, but there's no limit to what you can earn as an asset owner. Now, hear me very carefully here. This doesn't mean that it's bad to be an employee. This doesn't mean you shouldn't be an employee. This means you have to understand how to use your salary the right way. Because what wealthy people do, and the people that become wealthy, they want to use their salary to not just climb the corporate ladder, but they want to own the corporate ladder. That's what wealthy people are working to do. See, what most people are doing, the majority of people, is their sole focus is how can I do this? How can I climb my way up here? That way I can get a bigger raise. And if I get a bigger raise, well, now I can drive a nicer car, I can have a bigger house, and I can kind of live a more nicer lifestyle. But that's the game that the majority of people play, and that's the same reason why the majority of people stay broke or stay middle class, maybe upper middle class at best. But you don't have any real wealth to show for it. If you stop working, then what? If you take a 2-month vacation, then what? If you get sick and you can't work, then what? Your salary goes away, but you still have the expenses to pay. How are you going to pay for that? What wealthy people want to do is they want a system where they can own the investments. That way their money can keep paying them even if they don't work. And the way that you do that is by building your financial education to become an investor. That way now, instead of just buying the car, instead of just buying the house, instead of just buying the nice stuff, you're taking money to buy the investment, to buy the business. Now you're going to say, well, Jaspreet, I'm not a billionaire. I'm not a millionaire. I'm not a 100,000-aire. How am I supposed to do that? You don't need a lot of money to start. You can start doing this with as little as $100, even less than that nowadays. But you have to get started, and that means now when you make money, the key is to use that money to buy investments, to buy assets, because these assets will keep paying you even when you're not working. Let me show you why this matters so much. What I learned is that there are three different entities in our economic system. You have the C, the I, the B. You have the consumers, the investors, and the business owners. And this isn't something that somebody told me. These are things that I had to learn myself because I grew up in a traditional Indian house. My parents are immigrants from a state in India called Punjab. And growing up, I didn't learn about investing. I didn't learn about financial education. I didn't learn about entrepreneurship. I didn't know what rental properties were. I didn't know what dividends were. I was told that if you want to become successful, there's one path to doing so, and the path is by becoming a doctor. Actually, my parents were generous. They said, Jaspreet, you can either become a doctor or you can be a failure. You get to pick. And so I thought I was going to be a doctor, and then when I realized that medicine wasn't for me, I started to dive into this financial education stuff. My dad said that if you want to keep any pride in the family, you have to at least become an attorney. So I went to law school, studied hard, part-time, while I also continued to dive into my financial education full-time, and I was fortunate enough to graduate law school but never had to work as an attorney because I started to learn how this stuff worked, and I was able to see success in my business. I was able to see success in my investments. And what I've learned is that there are three different entities: the C, the I, the B, the consumers, the investors, and the business owners. And the way that our economic system works is consumers go and spend money at businesses. If I go to Chipotle and I want to buy the extra guac, well, I got to go as a consumer to Chipotle and pay them money. Everybody's a consumer. Rich people, middle class people, poor people, every single person is a consumer. Well, who does that benefit? If I'm buying this extra guac, who is benefiting? Yeah, the employees are getting a little bit of benefit because you get your salary, but we know that salaries are capped for most people, right? Unless you have ownership or profit share, most people's salaries are kind of capped, and salaries haven't kept up with inflation for many people. Now, for some people, right, if you were really one of the higher income earners, then maybe you're seeing that big salary growth, but if you look at the average person, you're not. So who's really benefiting? If it's not the employees, it's the owners of Chipotle. And who are the owners of Chipotle? Well, it is the investors in Chipotle. Anybody can be an investor in Chipotle if you understand how the game works. Now, I'm not telling you to go out and invest in Chipotle, but I'm just telling you how the game works. That's part one. Money flows to the investor. When people spend money, the person that benefits is the investor. The people that benefits is the owner. You don't have to go out and start the business, although I love entrepreneurship. If that's what you want to do, great. But most people should not start a business. But everybody in America or a first world country like that needs to own a business if you want to win in this game. Now, when I say own a business, that doesn't mean you have to go out and start it. It doesn't mean you have to manage it. It doesn't mean you have to work at it. It means you just work to own it. You become an investor. But it gets a little more interesting because now what happens when you see inflation? Well, inflation means I go into Chipotle and now I got to pay more dollars for that extra guac because inflation has made it more expensive. So now me as the consumer means I am spending more money at the business. We've all seen this in our lives. Well, who are those more dollars now benefiting? Well, if I'm paying more dollars, we know that the employees might be getting a little bit of a raise, but we've seen that the raise generally doesn't keep up with inflation. So who are those extra dollars going to? Well, let's just follow the flow. Those extra dollars are flowing to the owners and the investors. We saw this. I just diagrammed this for you, that not just over the last 5 years, or over the last 50 years, we've been seeing this happen, that investors have been getting windfalls. This doesn't mean that markets only go up. We know that markets crash. We know that recessions happen. In the last 100 years, we have seen 16 recessions. Those recessions hurt investors for a period of time. Over those last 100 years, we also saw 25 bear markets. Those are essentially stock market downturns, down stock market periods. Those down periods hurt investors, but they also create investment opportunities for the financially savvy because when investments go on sale, you can go out and buy a good investment at a discounted price. But we know that inflation, in general, has helped the value of investments, which makes investors richer while the average person is the one that's paying the price. It's consumers that are paying the price, but the average person is only a consumer. The average person is not a business owner. The average person is not an investor. And this is where you got to understand the game. Our system is designed to benefit investors. It's not designed to benefit employees. It's not designed to benefit consumers. But we're all taught to be an employee. It's not bad to be an employee, but you got to understand the game. That's how you get your salary, and now you got to take that salary and turn it into assets. You got to take the salary and turn it into ownership. That way you can turn that salary into real wealth. But that's not all. I went to law school. I don't work as an attorney, but I spent a lot of time studying the tax code. And what I learned is that our tax code is designed specifically to benefit certain people more than others, because all income is not created the same. When you go and earn money from your job versus somebody else earning the money from their investments, you don't pay the same taxes. If you make the same amount of money, you will pay very different amounts of taxes depending on how you earned that money. Because our tax code says that when you are an investor, you can qualify for either A, bigger tax breaks, or B, lower tax rates. Versus when you are just an employee, you pay the highest tax rates. It's called ordinary income, others call it earned income. That's the bucket that it falls into. And you also get the lowest tax breaks. And if you don't believe me, I also keep a copy of the Federal Income Tax Code in my office because yes, I'm a little bit of a nerd, and you can see how complicated this book is. It is 2,000 plus pages long, 8-point font, and the reason why there's so much stuff in here is because it talks about all the different tax breaks, all the different deductions that you can qualify for that you don't get as an employee. This is why, again, it is so important for you to build your financial education. That way you can actually become an investor and profit from the system instead of being the person that's making everybody else in the system rich. And then, of course, we have wealth killer number 3, which is the unfair system, which is not only do you benefit if you're an investor, but you're punished if you don't become an investor. Why? Because the entire system profits off of your financial stupidity. We talked about this in the beginning of the video. Banks profit when you stay in debt and feel stuck because now you're working hard just to pay off your debt. Now when you're paying off your debt, what are you doing? You're paying interest. To who? The banks. They get rich. When you are in that situation where you don't understand money and you just keep spending all of your money, well, who are you making rich? You're making BMW rich, you're making Rolex rich, you're making Delta rich, you're making Hilton rich, you're making everybody else rich that you're spending your money at. The person I want you to make rich first is yourself. There's nothing wrong with buying nice things, but there's a problem when you're buying those nice things and you don't have the money to actually take care of yourself first. Your boss benefits. Why? Because if you feel stuck, you're gonna feel scared to go out and find a new job. You're gonna feel scared to ask for a raise. You're gonna feel scared to take any time off because you need the next paycheck. When you feel so stuck that you need the next paycheck, you can't do anything else. The government, I already talked about this, the tax code is designed to charge you the higher tax rates if you are an employee versus an investor versus you benefit your investor. But now understand this, take a look at this, let's flip the script. When you become an investor, well now you could be the one that's generating the interest because now banks can pay you because now you can put your money into a high interest savings account and generate interest from the bank instead of paying interest to the bank. Maybe you can even invest in the banks. When you're an investor, well now you can buy the nice things that you want from the corporations and not have to worry about the price because now you can afford the BMW. Now you can afford the Rolex. You can afford the nice vacations. You can afford the beautiful cars. You don't have to worry about the price because you have assets to pay for it. Or you can invest in those companies. You can be the owner in those companies and now benefit when people spend money there. You can also understand how to use this to your advantage because now you can find a job that you love and you can work to actually grow in value in your company. There's nothing wrong with being an employee, but you got to understand the game. The way you make money is by providing more value to your company. And when you start understanding this, well, now you can start learning the game and you can say, hey boss, let me figure out how I can provide more value to you. Let me show you how I can make you more money. Because if you can make your boss more money, they will be more than happy than pay you more money as well. You gotta understand the game. Because if you just say, I want a pay raise, why? Things are more expensive. I don't care. Your boss doesn't want to give you a pay raise just for doing the same thing. But if you can understand the game and you can learn how value works and you can provide more value, well now you can see the big raises in your salary because now you understand how money works. Instead of just asking for more, you start providing more. And when you start providing more, you start getting more. You start to see the mindset shift. Then you can start to use the tax code to your advantage as well. This is why it's so important for you to start building that financial education. Start investing. I have so many videos on my channel. I'm gonna link one video for you down in the description if you wanna learn more about how to actually start investing. But this is why it is so important. And yes, it can feel horrible and overwhelming because when I first learned this, I was very angry. But here's the reality. Once you learn this, the question is, what do you do with the information? You can now go on and live your life just like every other day, complaining and crying and doing whatever, or you can start to use the system to your advantage. You can start to be smarter with your money. You can start to not spend all of your money. You can start to put money aside to invest. Start with as little as $100 a month. Start with $10 a month. Start with $50. Start with wherever you can. Then you start putting the money to work. Then you're gonna lose money at some point because investing, has risks and I'm just a random guy on YouTube. I can't tell you what to do, but you'll make mistakes. And as you make mistakes, you can learn. And as you learn, you start to see what not to do. And as you start to see what not to do, you'll start to see what to do. And you'll find an investing strategy that works for you. But it starts with that education. Yes, my team at Briefs Media has a full program called Briefs Pro, if that's something that you're interested in. But you just got to start building a financial education. I don't care if you do it for my channel. I don't care if you do it for somebody else's channel. I don't care if you do it for my company, Briefs Pro. I just want you to start learning how the system works. That way you can use it to your advantage, because we're not taught how this works. And this is the game that wealthy people are playing. But unfortunately, most of us are never taught this. If you have $100 in your bank account and you want to turn this $100 into $200 or $1,000 or even $10,000, you have to know how to take this $100 and put it to work. This is the art of investing money. And unfortunately, if you were not born with rich parents, chances are nobody taught you how to invest your money. But that changes today.